RHI Magnesita experienced challenging conditions in the first half of 2023, with very low demand volumes in the steel market and in all geographies except India. The nature of our industry cycle and the resilience of our business model and strategy has helped us to meet these challenges and deliver a strong performance in the first half of this year. We have achieved the strategic initiative targets that we set for ourselves in 2019, and we are now seeing a very important and growing contribution from acquisitions. Health and safety is a core value at RHI Magnesita. Unfortunately, we had more accidents on our plants in the first quarter of 2023 than the year before. Our target can be nothing less than 0 accidents, and we continue to work towards this goal. The focus areas for improvements were more detailed protocols for workplace inductions and more comprehensive safety trainings for new hires. We are now paying particular attention to finger and hand injuries, which was a major cause of incidents in the first quarter.
Our operational delivery in the first half of the year underpinned our financial performance, and it's pleasing to see that the key KPIs show we are doing well here. PIFOT, which is used to measure what percentage of orders are produced in full and on time, was at a record high in the first half of this year. At the same time, customer complaints were at a record low. This is evidence that the measures we are taking to reduce inventory and to create efficiencies in our network are structural. They are improving customer satisfaction, not impacting it. We continue to be the #1 trusted partner for our customers. This is the foundation for a strong business performance. We have been investing in our production facilities and raw material plants to create a technically advanced and cost-competitive footprint with a more localized supply chain. Our production optimization plan is now in its final stages. At our Dalian and Radenthein facilities, we are doing the final refinements in our new manufacturing enterprise system. At the Brumado raw material plant, we expect the expansion project to ramp up in the first half of 2024. In addition, in Chongqing in China, the new state-of-the-art plant to produce refractories for the cement sector will be ramping up in the second half of this year. The investments we have made in the rationalization and modernization of our production footprint is what lies behind the strong performance you are seeing in the first half of this year.
RHI Magnesita has completed 5 acquisitions in 2023 year to date and 8 in the last 18 months. We have been able to make progress in key target geographies and product segments. And every asset that we acquire brings a range of complementary attributes to our global network. Our new colleagues also bring new knowledge, which at times we happy and humbly integrate into our thinking. Through our M&A programs, we will be able to serve our customers even better than we are at this point in time. As we build a broader product portfolio, generate network efficiencies, increase our geographic reach and get closer to our customers. We are pleased with the progress that we have made in India this year, which is the fastest growing major refractory market in the world and will be the second largest region for RHI Magnesita at the end of 2023. We acquired 2 strategic businesses that will be highly beneficial to our customer offering: Dalmia Bharat Refractories and High-Tech. We have increased the number of plants from 3 to 9. We are now present in parts of India which we could not reach well before. This is vital to service our customers better. The merger with Dalmia Bharat strengthens our presence in India in the industrial markets. High-Tech supports our offering in flow control, especially in the high-value market segments due to the very modern plant in Jamshedpur. We're now well positioned to provide the refractory products and services that India will need in the coming years from within India itself. This will reduce India's reliance on imports, which are less reliable and bring logistical and working capital challenges. We have also made excellent progress in China, where we made a significant flow control acquisition, Jinan New Imei, following our investment in Chongqing for the cement market at the end of 2021. Our acquisition of Sermash in Turkey was the first of the 8 in the past 18 months. It is now making a material contribution to our financial performance, and the synergies we hoped for are beginning to be realized. Taken together, these acquisitions have generated 19 million euro of EBITDA in the first half, and we now expect around 40 million over the full year from M&A. Acquisitions are a key source of growth for us. We are also ambitious to lead the industry in terms of improving sustainability. Our recycling activities are a core pathway for us to reduce the CO2 emissions intensity of our entire industry. And the rate of use of secondary raw materials has continued to increase, now at 13%, from 9% 1 year ago. We have calculated that since the beginning of 2018, when we first started to really work on this problem and come up with real-world solutions, we have avoided the emission of over 1 million tons of CO2, which would otherwise be in the atmosphere today. These are real reductions in CO2. These are not carbon offset projects or green energy certificates. These are physical tons of CO2 that would have been directly emitted if we hadn't taken these actions. This is an excellent achievement, and one that I'm very proud of. We have all delivered this together. We are continuing to take our recycling activities to the next level, as well as working on the next stages for using alternative fuels and how to meet the challenges of capturing and sequestering unavoidable process emissions.
RHI Magnesita's revenue and earnings performance in the first half was strong. We've achieved this despite lower sales volumes, which are in line with weak global demand for refractories. We were able to do this through improved pricing year on year and from the contribution of newly acquired businesses. We continue to demonstrate the ability to set pricing at a level which maintains our margin, and we have again extended our track record in delivering stable EBITDA margins and cash generation through the cycle. Pricing was particularly strong in our industrial segment, a later cycle business. This demonstrates the benefits of our sector diversification, as our industrial business has supported our financial results during a weak period for the steel market. On the cost side, the refractory industry has seen a reduction in the costs of key inputs, raw materials, energy, and freight. This benefit has, however, been offset by lower absorption of plant fixed costs, as we're only running our plant at around 3/4 of full capacity. This is significantly lower than usual. We do this to match production with market demand and to reduce inventory volumes in order to manage working capital. We've been successful in releasing working capital from the business before M&A, with a reduction of 58 million since the beginning of the year and by 162 million from 1 year ago. Underpinning this working capital release has been an almost 20% reduction in inventory tonnage year on year, excluding M&A. We've delivered this as the performance of the end-to-end supply chain has got better, particularly for sea freight, and as we've seen improvements in our own stock management. This has been done at the same time as we have improved our customer experience and reliability, which is essential for our customers. We have delivered strong operating cash flows of 228 million and a high cash conversion rate of 114%. This is driven by the higher EBITA of 200 million, combined with the reduction in working capital and low capex spend. The cash generative nature of our business is a key strength of RHI Magnesita and a core part of our investment proposition. Following the strong performance in the first half, we expect EBITA margins to be between 10.5% and 11.5% for the full year, and to deliver at least 360 million of EBITA. Net debt will remain above 2 as we continue to execute our M&A pipeline.
Due to unprecedented global weakness in the construction industries, we are preparing for customer demand to remain low in the second half of 2023. Unfortunately, we expect to experience pricing pressure from our competitors who are getting nervous. Whilst cost inflation and therewith our variable cost has fallen compared to the highly volatile situation last year, we now face a new challenge to absorb fixed cost across lower production volumes. This is keeping our unit cost at close to their previous levels, so we don't have any room to reduce pricing without suffering in profitability. We are facing these challenges with a much more efficient network and with processes that 4 years ago, when we embarked upon our successful production optimization plan, were not in place. If we had not done this, we would be in a much worse shape now. Our operational discipline, our machine room, is also clearly improved. We have been able to deliver growth through our M&A strategy during a downturn in our customers' market. And we will continue to do so in the next quarters as well. We are continuing to progress the transformation of our business, improve our machine room, deliver our strategy, and now rebuild our IT infrastructure. Thank you for your support, your energy, and your emotions for RHI Magnesita.